you see a downturn in the future, or you see strong signs of a downturn potentially?
Well, I can't say that. Like, there's people that are talking about recession. Uh, I I really do not see a recession right now. I don't think we're in a recession right now. My wife and I, we traveled quite a bit. We were in the United States, November, December last year. We were in the United States for 3 weeks, September, October as well. We were, in the Caribbean for the winter. We're going back to the States, came back to Canada. I remember in the late 70s, early 80s when we were in a recession and people were out of work. There were no jobs. There was no job vacancies. I'm not seeing that now. I'm seeing still places where they're looking for workers, where there are jobs available. I'm not saying that it's, at some point in time, conditions are going to be so tough that, people will get laid off again, and unemployment insurance, like here we have employment insurance in Canada. People, like in the recession that I remember in 1970s, early 1980s, people were unemployed. They were receiving what's called unemployment insurance in Canada. And that ran out, and it was really tough times. I'm not seeing that right now, but I do see a lot of serious problems with inflation. I also see serious problems with the way the governments have tried to fight their way out of this inflation. I also see that with the pandemic, governments just printed money and gave free money away, and we're still feeling the effects of that. And I see that at some point in time, there's going to be a reckoning. I just don't know when that's going to be. But it's just a malaise that exists in the general markets. And I do see that. It's difficult to see exactly what the outcome is going to be. But at this present point in time, I don't see a recession.
Yeah.
There might be one next year, but I don't think our economy, the Canadian economy anyways, and what I saw in the American economy last year, I don't see that right now.
I mean, honestly, it seems kind of isolated to just the managerial white collar class. That's where you're seeing most of the layoffs.
Okay.
Right. I mean, like, this is just like based off some of the things that I've heard from the likes of like Daniel DiMartino Booth. She's spoken about this very recently. So to your point there, there's not much anecdotal evidence that I see either of a recession in my neck of the woods down here in the States.
So I've been spending quite a bit of time in Toronto in the past 4 weeks, which is our major city. And I'm telling you, like, the highways are packed full of goods being transported and different service purveyors and different products. Just like it seems to me like there's a lot of economic activity going on anyways.
Yeah. I see it here too. Just kind of bring us back to the uranium fold. Would there ever be a point where you just stop buying or adding to your positions in the event that the price gets a little too ahead of itself, or that the price just runs and you just say, you know what, I'm in a hold. I'm not going to add any more positions. I'm just going to hold cash at the moment.
It might very well be, however, as I said, the situation just keeps getting better and better and better. Mm-hmm. For example, okay, in 2016, 2017, 2018, 2019, 2020, 2021, like, the nuclear industry was dead. Like, there was no growth, no hope for the nuclear industry. Is in the past 2 years, that's done a complete 180. Governments, all kinds of different organizations and environmentalists, and it's support for nuclear where you didn't see it before. So I think that, this sector will see growth, longer than what I had anticipated when I first got in 2017, 2018. So, that's what I mean when I said at the beginning that I'm going to be looking at, the macro aspect of it. The nuclear industry itself, how is that evolving? Like, are the nuclear build-outs slowing down? The promises of small modular reactors, is that really, are we executing on that, or is that just a pipe dream? You know, are, you know, our governments and environmentalists, are they going to stay on this bandwagon, or are they going to switch back to something else?
Mm-hmm.
So, yeah, at some point in time, I mean, depending on what the information is and how things are developing, I might say, okay, I'm out. But I could also see myself saying, okay, I'm going to take some profit off the table, but I'm going to remain in the industry for a longer period of time. And I might also, change my investment strategy. Like there's a uranium royalty, vehicle that I'm intrigued about. You know, Kazatomprom and Cameco, they're going to be cash cows in the future, paying dividends. And, so, you know, I might shift my portfolio, into different areas in this sector. So it's very difficult for me to say exactly what I would do. But those are the kinds of, questions I'm asking myself with regards to how am I going to move forward.
Yeah, you know, especially if you look at like some of these supply deficit charts that kind of extrapolate out into the 2030s and so forth. We really haven't seen anything in terms of supply deficits yet in 2023. These things start to widen out in the next 6 to 7 years. That's when it gets really crazy from a supply demand point of view. So I'm kind of in the same camp as you are. I think it's going to go a lot longer than a lot of people are anticipating. You know, I know some people like Justin Hune. He said it a few times before that he expects it to be maybe like a 2 to 3 year run from here. But you know, in my opinion, I could see this thing playing out all the way out until like the late 2020s. What do you think?
Well, Justin also says that, you know, I think he shares the same opinion that I have. I don't want to speak to Justin, but with regards to, I think he sees this going on longer than what he thought as well.
Mm.
So, you know, you talked about the supply demand, scenario. You know, one of the reports that a lot of people, rely on is the WNA. They had come up with a supply demand scenario, every 2 years. And I think they'll be coming out with their new scenario or updated scenario next week or the week after that. But, just to give you an example of how this sector is dynamic, there's another factor at play this year, and that's going to become a bigger factor that I hadn't even considered until last year when Russia invaded Ukraine, which is underfeeding and overfeeding. Where now, because, you know, Western utilities are changing, where they're obtaining their different products and services, you know, now Western friendly converters and enrichers, are getting more business, and to be able to provide the services and products that are needed, they increase their prices. But into conversion, they need to, or enrichment, that is, they need to oversupply, overfeed, which is going to generate a demand that none of the models had foreseen, you know, until early this year, late last year.
Yeah.
So it's a very dynamic sector, and again, where the fundamentals are getting better and better and better. And with regards to the past few years, there was always different roadblocks, you know, saying, well, there's a lot of uncertainty because of, you know, the Russian suspension agreement or this type of thing, or the Section 232 or whatever. There was a whole bunch of, you know, sort of roadblocks and uncertainties that were kind of holding the sector back. But at this present time right now, like I started out by saying, all systems are go right now. I think there's a couple things holding us back. You know, if there's a big market meltdown, general market meltdown, which we sometimes see in the fall, October or something like that, that would not be helpful, in the short term anyways. and a nuclear incident that would definitely hurt us. But mid to long term, um, it's still looking really, really good.
Yeah, yeah. In terms of analysis, when you're looking at these companies, when you're looking at the sector as a whole, do you leverage like any technical analysis, or do you stick to fundamental analysis, or otherwise?
When you talk about technical, are you talking about looking at charts or?
Yeah, looking at charts and patterns
Oh,
and charts.
no, I do not. No, I just look at, as I said, like for the explorers, for example, where were they at when I had money to deploy? What was their market cap? What was their share count? Like ISO was just such a great. It still is. It's the gift that keeps on giving. Because over 50% of the company was held by NextGen, and they had a very low share count. So whatever shares were traded on the stock market, there was not a lot to go around. So when people wanted to place a bid on the share, the bid went up pretty rapidly. And if you look at ISO's performance in the last month, it's been pretty good. It's been actually stellar. I think they went up 45% in August alone. So, yeah, that's the kind of thing that I would look at. I did not do, I actually don't know how to do technical analysis. I'm sort of ashamed, not ashamed, but, to say.
Yeah, well, I do it sometimes on the channel, so you're always welcome to
But I
check it
watch
out. Yeah.
technical analysis. I watch technical analysis, but I don't do it myself.
Yeah, yeah, fair enough, fair enough. A lot of well-known and highly esteemed investors don't dabble in technical analysis, but I'm a numbers guy and I like to look at patterns, so it's just a natural. It's to me, it's kind of fun, but I totally get it there.
And I like what you do. Like I like watching what you do. There's Andy finding value. He
Hmm.
looks at all kinds of different ratios. Which is interesting to me. And you do the same thing. So, but I mean, I think we're all singing the same freaking song.
Yeah.
This is a great setup.
Yeah, totally agreed. So, Terry, we're heading up an hour now. I want to give you a chance to kind of leave the audience with some closing thoughts, and also where can they find you as well?
Well, thanks. People have reached out to me on X or Twitter, direct message, but for some reason I tried to open my Twitter account with my computer, and it said that my Twitter account is I've been booted out of X or
Hmm.
Twitter. I don't know why. I did I did criticize Elon Musk a couple of weeks ago, his new X platform. So I'm wondering if that's the reason why. But
You probably
I can
fired too
still
many
access.
engineers.
Yeah, I can still access it on my phone. So direct message. But the closing message is, the sentiment has been absolutely rotten in the sector since I would say May of 2022. It's been a really bad ride down. We peaked in April 2022, and then it's been downhill ever since, except for the last 2 months, especially the last month. So sentiment has been absolutely horrible. And a lot of people entered the sector in the fall of 2021 when the sector was starting to get red hot. So, the timing was not good for a lot of these people, and a lot of them are down big time. So a lot of them got burnt, and they're just disenchanted with the sector. So I understand, but and they're tired of hearing people like myself and Justin and Rick Rule and Andy and you, or a whole bunch of people saying, the setup is pretty good. But I'm fully convinced of that. And I think that, we're going to have our day.
You're already starting to kind of see that with Rishi Sunak, for example, over at the UK. They recently opened up drilling into the North Sea, right? So, how many more? Do you also anticipate more of these G7 countries, including the United States and Canada, beginning to cozy up again to drilling? And what will be the impact of the oil price by then? At that point?
Yes, yeah. I think you're seeing some of the narrative shift already. We saw some indications last year, and then now it seems to be building up steam. Where not only is it kind of pro fossil fuel, and again, it's not the majority. It's just some things are coming out one at a time.
Mm-hmm.
Where it's pro fossil fuels, but there's also a lot of anti renewable pieces that are suddenly coming out, talking about the cost of wind farms and the cost of solar panels. And then you really think about it and you say, okay, if we don't invest in oil and the price of oil goes up, well, then the price of mining these battery minerals goes up, and manufacturing and processing, therefore the price of your renewables is going up. So you haven't really solved the problem where they said it was just going to get cheaper and cheaper. So I think that's part of the issue with this, is the media narrative has been so one-sided. So that changing is one side of it. Some of these drilling projects getting approved is another side. But I mean, how many people know that Rishi Sunak approved drilling projects in the North Sea or outside of the UK, right? It's not a very well-known fact. So I think that being disseminated more will change some of the narrative. But really, to me, it comes down to two things. The world has to believe that at a higher oil price, U.S. shale cannot grow. That's the one thing they have to believe. The second thing they have to believe is that OPEC Plus is in control. They are back in control after 10 years. So OPEC Plus was in control. Well, OPEC was in control in 2010 to 2014. The world needs to believe that they have a good handle on the markets going forward. So those are the two factors. If we can solve those, I think you'll see a lot of changing discussions around where oil is and whether it's a good investment. Because right now, I'll tell you, 90+% of the investing community, if you told them to invest in oil, they'd say, why? As soon as oil goes up, US shale will just add 1 million barrels per day. And right now, we don't have the data to say no, because the price of oil hasn't gone up and stayed there for a year. So once it goes up 80, 90, 100 plus, stays there for a year, and then you see, well, hang on a sec, the rigs still haven't gone up, or the frac fleet still hasn't gone up, or the fact that the new wells are drilling are just making up for the decline rate on shale. Now some of the people start to question it, because the logic and the data defies what their base level thinking is. So you really need that shift. And that's the problem with the oil industry, is the lower for longer cycle went on for so long that people are now jaded. If it was only at 2 years at $50 a barrel, people might be more willing to come back in and say, okay, things have changed. But they've heard the same story for 6 years, that shale is collapsing, shale is collapsing, shale is collapsing.
Yeah.
And yet it didn't collapse. It kept growing 1 million barrels per day. So now they say, I don't believe any of this nonsense or this data. Like, show me when it actually happens or is well on its way, and then I'll put my money back into this sector. And you know what? I'm happy for that. That's fine. Because in the meantime, what's happened is the kind of the third structural shift that's happened is companies have stopped investing in growth. So they've started investing back into dividends, debt payback, and buybacks. And hey, if a company over the next 6 months can buy back 12%, 10% of their float at 3 times cash flow, at 2.5 times cash flow, be my guest. Let's ourselves push this share price up, just with less shares outstanding. And then whoever wants to enter at a future point in time now has a massively reduced float. And then this is not just me saying what I think is going to happen. There's already companies out there that have reduced their float 20, 30% since 2020. So they're already well on their way. And there's actually one service company I want to say that's reduced their float almost 40% since 2017. So they're already putting their money where their mouth is.
Yeah. So this is kind of a tough question. I'm not expecting you to have a clear-cut answer to it, but have we hit peak oil?
Like peak oil as in supply, or?
Yeah, as a supply.
I don't believe so. No, because the peak oil supply can only happen if there's peak oil demand. And if the demand is there, we will produce the oil at just a higher price. So if you told me, if you came up to me today and said, hey, Shubham, I can promise you $150 oil for the next 5 years. And you're like, okay. and I'm also going to give you an unlimited check, a blank check to go and find me oil. Well, I can get you 5 million barrels per day of more supply in 5 years from the Canadian oil sands, from fields in Kurdistan, from going out and fixing some of the Venezuelan fields. If you gave me $150 a barrel for the next 5 years, I could do it. So we have the supply. We just don't have the $70 oil supply. We don't have the $80 oil supply. We have $90, $100+ oil supply, especially because the risk premium that people are requiring is a lot more. It's not because that barrel physically costs $90 to produce. It's because people are saying, no, I put money in 2014 and I haven't got my dollar back even now, 10 years later. So why should I give you another dollar? That's the way they're thinking. They're saying, okay, well, if you want my next dollar, show me that you're making 30% free cash flow yield. Well, that can only happen at $95, $100 oil. So that's essentially what's causing us not to invest in that supply anymore. But we have the oil. We have the oil. I mean, I don't want to make any sort of crazy kind of hot take here, but I think we can add, if we really needed to, we can add 10 million barrels per day by 2030. If we really needed to, we can do it. Yeah. But it's going to cost you. It's not going to happen at $70 oil, especially with shale declining. It's definitely not going to happen, because when I say we need to add 10 million barrels by 2030, that essentially means we need to add 12 to 14 million barrels, because U.S. shale is going to decline 2 to 4 million barrels. By then, maybe more. We're now getting into hypotheticals 7 years out. So just directionally, what the addition would need to be in order to grow the total by that amount.
But don't we need a different type of crude oil here in the United States that our refiners use versus what we actually produce? I believe it's like Venezuelan oil, something like that. I know there's light, sweet, and heavy sour. Which one do we use?
Yeah, so the U.S. refining for the most part right now is structured towards the heavy sour barrels, okay, or the medium sour barrels. The U.S. produces, it's not even an oil anymore. It's light oil, but it's getting into your natural gas liquids and your condensate grade of oil, and a lot of that is now exported out of the U.S. So year to date, 2023, America has exported roughly 4.1 million barrels per day of crude. The majority of that is your light sweet grade that goes into Europe, into Asia, and other parts of the world. And then they import roughly 3.5 million barrels per day from Canada every single day that then gets processed in the refineries. So you're absolutely correct, is that from a refining standpoint, the US needs more Mexican, Venezuelan, Iraqi, and Canadian oil if they really want to maintain the same kind of refining infrastructure. However, in a long enough time period, you can change your refining sort of mix or blend as well. Would the US want to go and invest in that? Maybe not, because they have Canada right there that they're hoping is going to be, maybe not today, but in 2, 3, 5 years, is going to be your next source of sort of supply. So yeah, we'll I guess find out. One of the things that keeps me a very, very oil bull is that nobody in Canada wants to add more supply. So if you've knocked down the one place in the world where you can add meaningful 7-figure barrels, well, then you're going to have your structural bull thesis continue on for a lot longer. And yeah, we can thank some of the political decisions in North America for that.
Yeah. So why did the U.S. structure its refining capacity in such a way that it only feeds in heavy sour as opposed to light sweet, which it actually produces from within its own soil?
Right. So really the main reason is that when the U.S. refineries were built, the U.S. was producing heavy sour, medium sour out of California. They were producing 2 million barrels per day out of Alaska. They were importing a lot of oil from Canada, from Mexico, from Venezuela. And so a lot of the oil that was being processed was that quality. The light sweet revolution has only really taken off since about 2012, I'd say. 2010 to 2012 is when things really started picking up. And in 2016 onwards is when the huge barrels got added. And the US has not built a new refinery in decades. I want to say the Exxon Blade project was the newest one. after like 20 or 30, maybe more years. And I think there's one more refining project on the go right now, but a lot of our refining infrastructure in the US is 25, 30, 40 years old, maybe some even 50 years old. So they were built for a different time, and now we're at a different time, with the oil that's being produced. So the real question is, what does the US want to do? Do they want to keep their barrels inland, or do they want to continue sending their light sweet barrels out and then importing some of the heavier barrels? Because let me just put it this way, just to put a data point out there, is it'll cost you tens of billions of dollars to build a refinery for 500,000 barrels per day capacity, whereas you can send oil from the Gulf Coast of Texas all the way to China for $2 a barrel, something like that. Shipping is not that expensive.
Yeah.
Shipping oil and importing oil is just not that expensive compared to what it costs to build and then run expensive refining equipment. So which company wants to be the first one who goes out and does that? I guess we'll find out. If they see an arbitrage there, they'll do it. But if there's no arbitrage, then you're playing a betting game, and there's not enough money right now funding oil and gas to go and make bets on future arbitrage opportunities.
Interesting. So who typically buys light sweet oil from us?
So a lot of the US exports are going into Europe, and then China is buying a lot of the barrels as well, and then India buys a few. Some of the other Asian countries, I want to say Vietnam was buying a few. It's kind of all over the place, but there's really no big buyer. It's a lot of it ends up in Europe through the Netherlands, and then a lot of it ends up in the China Asia complex, and their refineries are newer refineries, so they're built for that sort of grade of oil. Overall, globally, we are producing less heavy sour than we used to be, and we're producing a lot more light sweet. So it gets into a kind of blending. What's the right mix of crude oil we need in the world going forward? There's certain grades can only produce this kind of product, so you can't get asphalt out of a light sweet grade. You're not going to get your petroleum waxes out of a light sweet grade, and your heavier grade is going to produce a bigger content of diesel compared to the lighter grade. So there's sort of all sorts of things that need to be taken into account when you build a refinery around that. And then it's not just the grade of oil, it's how much sulfur is in there, how much contaminants is in there, what is the max water percentage that can be in that oil mixture, what kind of fuels are you trying to produce? If you're building a refinery in a place that's a high manufacturing area, well, you want more diesel fuel produced. If you're in an area that's very, very population centric, you want more gasoline. So there's a lot of components and sort of factors that go into that. All I can tell you is the world is doing a much better job at building new refineries than the US is at this point. And maybe the US doesn't need new refineries, so they're just taking along with what they have, whereas the world does need the new refining infrastructure, so they're willing to put the money behind it.
Got it. So it sounds like, from what I'm hearing, light sweet is more geared towards light sweet is geared more towards fabrics, and then heavy sour is geared more towards actual not gasoline, but
diesel. I think more diesel distillates.
More diesel. Yeah. Okay.
Yeah. So that's kind of the rough breakdown, but it's not as clear as that, because light sweet oil can also produce diesel. Mm-hmm. So it just produces less of a percentage per barrel of diesel than a heavy barrel would. So each barrel is going to produce diesel, jet fuel, kerosene, naphtha, some sort of waxes and asphalt, and then there might be some other things that drop out of it, depending on the carbon chain and the molecule. Whereas the light sweet will produce, we're going to produce a higher percentage of gasoline, we're going to produce a higher percentage of naphtha per that barrel. And one interesting thing that your viewers may find interesting is that when you refine 1 barrel of oil, you end up producing about 1.06 barrels of product, because you're usually refining a barrel that's heavier as in more energy dense, into products that are less energy dense, so you get more volume.
I see.
Out of that. So when you look at global refining capacity, if we want to process 100 million barrels per day of oil, we're only running about 95 million barrels per day of refining capacity for that.
Interesting. Well, this has been a very enlightening episode. I really enjoyed this talk here, Shubham. Thank you so much for coming on. Go ahead and tell the audience where they can find you again.
Yeah, you bet. So my website, whitetundra.ca, you can see all my content on there, the previous videos, archives. I'm a bit behind on updating the archives, but we'll get to that. My two portfolios are fully public. I'd like to update them every couple of months, or if there's major changes. So that's on there. All my articles and whatnot, everything is on there. And then the future Zoom sessions as well. Everything is pro bono. If you get an email from me that you got to pay me, it's fake. I don't charge for anything. And then my Twitter handle is at whitetundra.sg. You can find me there. I like to post about supply, demand, macro, engineering, well results, etc. As well. And then I don't exactly know what my YouTube handle is, but if you just search White Tundra Investments, you will find it on there. So I think it should be on the top. I want to say I was competing with the white Toyota Tundra on the Google search results for a while.
Yeah,
and I think I finally have. Yeah, I think I finally won that battle in certain areas. Maybe other areas I still have some work to do. So that's kind of where I am. And then I have a contact us page on the website as well, where any questions, any comments, any future topics you would like to see from my presentations, feel free to shoot me a message, and we can chat from there.